Hey folks, Dan Frio here, the rate update. Today is March 3rd, 2022. I got it right that time. Guys, I apologize. You can see the bags under my eyes. It's been a grueling couple weeks. And if you're in the stock market, you're in the crypto market, or you're in the mortgage business, it's crazy. So what I want to go over next is where mortgage rates are. I'm going to give you a little recap of this week so far because it's been a crazy week. And then the economic news, and then my projections on where rates should be going from here. So don't go away. That's what we're going to talk about next. Okay, so welcome to the opening bell with Dan Frio. What we're going to talk about next is where the rates opened, what the MBS market is doing, and what the economic calendar looks like that's making all these changes take place. So let's get to it. Where are mortgage rates for the day? So let's go across here. Here is what's posted by Mortgage News Daily. This is not my rates. I am a mortgage broker. I deal with over 100 different lenders in the country. So probably most of the people that they surveyed, I work with. Okay, so let's go across the board on this. The 30-year fix is coming in at 4.08. It is up 18 basis points from the day before. Okay, to get that rate, it's still going to cost you 0.4 in points. How do you figure that out? Well, it's pretty simple. What you do is you take your loan amount, multiply it in that case by 0.4, and then hit the percent sign. That'll give you how much it would cost you to get that rate. So let's move on, and we're going to go to the 15-year. The 15-year is coming in at 3.4, up 15 basis points. It also is coming in with some costs. All right, the FHA/VA, we're going to say that for this is the government loans, and it's coming in at 3.63, up 18 basis points. You're seeing a trend here. It's 18, 15, 25, nothing but up, and that's not good. Okay, the jumbo, look at the jumbo. It's up over 0.25% within 24 hours. And that's crazy. Okay, it's coming in at 3.63, no points. And then the 5-year ARM's coming in at 3.65, up 15 basis points, but it does come with a half a point. And again, these are not my rates. These are the national averages. Then when you scroll down here, you're going to see the economic trend, or the trend that we're seeing right now in the MBS market, and I'll explain that next. And we're right between positive and neutral, put it that way, which is good. I'm fine with that. So let's get to the MBS market. This is where it confuses a lot of people. Mortgage rates are created by a couple different variables. One of the most important variables is what's happening to the MBS market. It's a mortgage-backed security. It's a bond that trades on Wall Street. That's yield is the biggest piece of your mortgage rate. So that's why we follow that. We do not follow the treasuries or anything else. I'm going to do a video on that, how the correlation is usually there in most cases between the MBS and the 2-year treasury, but in many cases or many times it isn't. So that's why you don't follow that indicator. So let's go over to this. The MBSs are up 13 right now. I said that yesterday or last night, and I posted that on a few comments this morning in YouTube. They said, is this going to continue, this debacle in the MBS market? And I said, no, because the move we saw yesterday was way crazy. And I'm going to explain what happened yesterday and why all that took place right now. Okay, so what happened yesterday is we came in with non-farm payrolls, and the payroll numbers came in really good. Okay, between that and Federal Chairman Powell's testimony in front of Congress, that created a complete crash of the MBS market. Because what happened is, or what the anticipation was, is the Fed was going to kind of back off because of the Ukraine-Russian situation, and then we're going to kind of teeter. Are we going to raise rates? Are we going to start tapering? Are we going to do this? What are we going to do? Okay, but Federal Chairman Powell came in yesterday and said, no matter what's going on in Russia and Ukraine, we're going to start quantitative tightening, and we're going to start raising rates, and we're going to start selling bonds and so forth. And that tanked the market because they are a big buyer, or we're a big buyer of the mortgage-backed securities, keeping a lid on the yields there. So if that's confusing, continue to watch my videos and you'll get it over time. It's a learning channel. That's what we do, especially in the mornings. Okay, so let's get over to the news, the headline news. And we're going to see here that mortgage demand could get a boost from the Ukrainian situation. Well, what happened was exactly what I just said. We thought, or a lot of people thought, the Federal Reserve was going to kind of sit back and say, we're going to wait for this to cool off or do something, and they didn't do that. Okay, so now let's go back to the economic calendar and see what's projected here coming up. We go over to the calendar, and you can see also, we had the payroll numbers, like I said, come in very robust, which was good. And then today we had jobless claims, initial jobless claims, which less people filed for unemployment than was expected. And then was from the month before as well. All of these pieces of the puzzle are what is affecting mortgage rates right now. Okay, so what is my projection? Well, today we're going to be kind of stagnant, okay, because we're coming off of yesterday's complete crash of the MBS market, which was over 100 points. I've only seen that one other time in my 33 years of doing this. Okay, so that's what I anticipate right now. Next week, the Federal Reserve is going to meet. They're going to have their meeting. What are they going to do? My prediction is they're going to raise rates 0.25%. Okay, so what does that actually mean? Is the mortgage rates going to go up 0.25%? No. Okay, what it is the federal funds rate goes up 0.25%, and that's interbank lending. So, but that normally has a trickle effect through the rest of the economy. Okay, so you're going to start seeing rates on things like cars, credit cards, every credit line other than mortgages that are tied to mortgage-backed securities. All that stuff is going to get more expensive. Okay, so that's what's going to happen. What's going to happen? What I project is the biggest curveball right now is Russia and Ukraine. If there is a slight ease there, you're going to see the stock market rally big, and you're going to see mortgage rates continue to increase. I'm still calling for the end of this month, we're going to be at 4.25 to 4.5, and by the end of the year, 4.5 to 5. And that is all now contingent upon the Russian situation. Okay, so that's one of the big caveats that I don't know what's going to go on there. You know, if they go nuclear, that's a whole nother ball game. So that's why I'm going to continue to keep you guys posted on what's going on with mortgage rates and why. But if you like my channel and you find value in it, all I ask you to do is give me a thumbs up, subscribe down below, hit the bell every time I post a video, you get an alert. I'm going to come back today to explain to you guys, is paying points, like we showed on the rate sheets, is paying points a viable option to you? Should you do it or shouldn't you? And that's, we're going to answer that later this evening. So thanks for watching. God bless. I'll see you later this afternoon.